This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Maury Marks, President and CEO of Quorum Information Technologies, Inc. It's a publicly traded company. The symbol is QIS on the TSX Venture and QIFTF on the OTC Pink. Quorum is a North American SaaS software and services company providing essential enterprise solutions that automotive dealerships and original equipment manufacturers, OEMs, rely on for their operations. I've known of Quorum for a while now, and they recently jumped back on my radar again when they announced a new addition to their board of directors, Damien Leonard, who's president of Pine Tree Capital, which we talk about today. And so I invited Maury on to better understand the business, as well as their 4 enterprise solutions: Quorum's dealership management system, DMS, DealerMine CRM, Autovance, and accessible accessories, balancing their desire to accelerate organic growth in the business via cross-selling their solutions to existing clients, and how that in turn speeds up their ability to be more acquisitive. Their current market penetration, they're well known in Canada and looking to expand further into the US, plus how they will do that, and Maury's 3 to 5 year vision for the company and inflection points that will get them there. With that, please enjoy my conversation with Maury Marks, President and CEO of Quorum Information Technologies, Inc. And one last thing before we get to our interview today with Maury Marks from Quorum. The company asked that we share their forward-looking statement and disclaimer slide for the video version, and then also a short disclaimer from the company for the audio version. So real quick, here we go. On behalf of Quorum Information Technologies, Quorum would like to remind everyone that certain statements made in this podcast are forward-looking in nature. These include statements involving known and unknown risks, uncertainties, and other factors outside of management's control that could cause actual results to differ materially from those expressed in the forward-looking statements. Quorum does not assume any responsibility for the accuracy and completeness of the forward-looking statements and does not undertake any obligations to publicly revise these forward-looking statements to reflect subsequent events or circumstances. For additional information on possible risks, please refer to Quorum's annual MD&A dated December 31, 2022 on the CDR website. Maury, thank you for joining me today. How are you doing?
Oh, thanks for having me. Doing great.
Very good. Well, it's great to have you on here. Look, I think I've known the Quorum story for a while. I think it's been talked about in the MicroCap Club a little bit here and there. So, look, it's your time came and now you are here. Let's do this. So,
you bet.
So my first question that I always ask everyone on here and I didn't prep you ahead of time for this, so I'm getting you right on the spot. But can you start us off with that one line that best describes Quorum?
Product suite for franchised automotive dealerships across North America.
Beautiful. That's very nice. All right. So now we'll dig into the history and stuff. I want to take a look back at Quorum's history. Maury, when was the company originally founded, and what was the original thesis for its founding?
Yeah, so we were founded a long time ago. We're 25 years in business now. So the thesis, well, maybe I'll talk through the history and explain the thesis as I go along. When we originally started the company, we were looking at building an ERP for a car dealership, right? Same dealership you'd buy a vehicle at, get your vehicle serviced at, which is a fairly complicated business because they sell cars, they service cars, which means they have a parts inventory, they got to manage technicians, they have to do all the accounting, all the CRM, and then of course they have to integrate to the factory so that the GMs to the Toyotas of the world as well. I think if, looking back on it now, if we knew how much work it was when we started, we might have picked a different vertical, but here we are a number of years later. So we were building an ERP for car dealerships. My background is I grew up in a dealership. My parents owned a dealership. I have my CA or CPA articled with Deloitte and Touche, did a whole bunch of systems work with them. So I had a background in automotive, in accounting, and in systems, and brought all of that together to work on this. And so we're building away on this ERP system. It's called a DMS in the automotive space, dealership management system. And we were getting ready to install our first dealerships. And as we were installing our first dealerships, we came across a big realization, and that was every dealership we went to had multiple other third-party solutions. So we would always have to build integration to all of these different third-party solutions. And as we installed our DMS and as we built it out, we kept looking at it and going, well, here we are building all this integration. Why don't we just start building some of these third-party solutions? Why are we doing a heavy lift on integration when we could be instead spending that time building a third-party solution? So after a number of years of doing our installs, we started actually building out our own third-party solutions. We started with a sales CRM solution. We built out a service lane tool that did walkarounds, mobile inspections, and we built out a communicator, what we called a communicator tool, which did emailing, texting, instant messaging to the consumer to let them know simple things like when your car's ready for pickup, stuff that dealerships are terrible at, right? They're terrible at communicating to their customers. And so we were helping that. And as we built these different tools out, what we were realizing is we were really solving some key problems for the dealership, but we were also helping them drive revenue into their business. So we weren't just a cost of doing business anymore. We were actually bringing revenue in. We were increasing customer sat. We were doing some mission critical things for the business. In fact, the solution that we built that was the mobile service lane solution was driving in $60,000 of revenue per month per store. So it was really helping the dealerships out. But we also got to the point where we couldn't just keep building and building and building and building on different pieces. It became difficult to manage, and we paused and we did a big study across the entire automotive network out there, and we realized the average dealership has 25 different solutions to run their business, right? And I go back again to the complexity of their business, a sales department, a service department, a parts department, maybe a body shop. They've got all these different competing needs. And so the average store is up to 25 different solutions. So imagine running your dealership, 25 solutions, some of which integrate, some of which don't, different reporting systems on different solutions, and trying to keep all the plates spinning, so to speak. We were at 4 solutions, our DMS, and then the 3 others that I described. And knowing that there was a long ways to go, we started down a path of first off partnering with different companies and having special partnering relationships with them. But that quickly morphed for us into an acquisition strategy. And we completed our first acquisition back in 2017, a company called Autovance. Then we completed another acquisition in 2018, a company called DealerMine. Completed another one, Oasis, and then another one, Accessible Accessories, and then we just completed our most recent acquisition, VINN. What that did, the accumulation of those acquisitions, was it gave us 13 different solutions. So we're now at 13 of the 25 solutions. And it really gave us quite an nicely integrated product suite for the dealership, but an integrated product suite of best-of-class products. Because we were acquiring these companies and they were leaders in their respective categories that they were providing through to the dealerships.
Very good. And thank you for that full overview there. That gives us a lot of meat to work with right now. So I think probably the first question I have following up from that, what is the current market penetration, or where are you actually selling? Like where are your dealerships that you're mostly working with right now?
Yeah, so we're selling in both the Canadian marketplace and the US marketplace. We are much better known in the Canadian marketplace. In fact, 92% of our revenue comes from Canadian franchised and independent dealerships, but mostly franchise stores. And then as a consequence, 8% from the US. In terms of market penetration in the US marketplace, we're less than 1% of the dealers. In the Canadian marketplace, we're over 40%. So we're a well-known brand in the Canadian marketplace. In the US, lots of room for growth.
I was gonna say, what's holding some of the U.S. dealers that you're probably already speaking with back from now transitioning everything that they have to the Quorum system?
Yeah. So the US marketplace always a much more complex marketplace than the Canadian marketplace. And in the automotive space, it's more complex because more banks that you might deal with, more different companies that you might buy, warranty, insurance for vehicles, just more tax jurisdictions and more complicated tax rules. You have to build integration that you build to the manufacturer in the Canadian marketplace might be different in the US marketplace. And in a lot of cases, we have to build that integration with the manufacturer before we can sell to US dealerships. So, I guess it's been a combination of product readiness and always continually working on product readiness for the U.S. marketplace. It's been another piece of it is brand recognition in the U.S. marketplace, and how do you go to market, and what kind of investments do you need to make to go after the entire U.S. marketplace, or even very specific regions in the U.S. And it's a big investment, and so we've been doing it very careful steps at a time.
I mean, yeah, like, look, when you look at the US, it's like, all right, well, where do we go? Even if, yeah, that's a very complicated question that I'm sure you've been racking your brain about. It's like, all right, do we start in the Northeast, work our way down? Do we start from the South up? I don't know. It's that's a tough equation. I mean, when you're looking at, all right, let's focus on Canada specifically. As you said, you have a big portion of your market share there. So tell us what maybe that sales cycle was like and how you built it up to that kind of market penetration you got to. So, because maybe that can project out like, oh, okay, well, maybe they can replicate this model in some sense in the US.
Yeah. And there's different ways to replicate the model. And so, if I talk through the acquisition history, that'll make it clear on how we can go about a similar path in the U.S. marketplace. So all of our acquisitions to date that we did, 5 of them in the last 6 years, each of those acquisitions was a meaningful growth point for us from both a number of dealerships and from a revenue perspective. All of those acquisitions were Canadian acquisitions. In 2 of the cases, they also sold their products into the US. So now we're backfilling that and making products US ready. So for us, we went from 419 dealerships back in we went from 325 dealerships back in 2016 to now we're over 15 with our latest acquisition. We're over 1,500 dealerships in 2023.
Very good. Oh, sorry. You're gonna say.
With some organic growth, of course, through there, but with a big piece of that being inorganic acquisition growth.
Well, it makes sense, right? Like, because you're probably dealing with dealers just like, all right, I got to revamp everything now, So I understand that model of like, okay, well, let's look for who are some of the other players in the space that, this could make some sense for. You mentioned also that right now Quorum has within your solution set 13 of the 25 solutions that dealerships need. Am I right on that?
Correct. Yep.
Okay. So, I mean, that basically gives you the clear criteria for anybody that's thinking out there, okay, well, this is their criteria for M&A. Like, well, all right, there's the other, my math serves me. I guess there's 12 others that need to make that up. So what are these other 12 that you're now looking at, and will they help serve with your entree into the US?
Yeah. So I'm not going to describe all 12.
Maybe not all of them, but
I'll give you some
key ones.
Sure. I'll give you some different examples. So, one of the solutions that we acquired, we acquired the company and then we built out the solution is a digital retailing solution, right? Everybody's talking about being able to buy a car online. And so we have a solution to allow consumers to go online and start the vehicle acquisition, actually go through and buy a car online. But there are pieces to that particular solution, as there are to anybody's online digital retailing solution, that we still need to build out. And one of those would be how we value trade-ins, as an example. Today, we can get if you're going to buy a car online, you of course want to sell what you're driving. We can give you a trade-in value, but there's solutions out there that will go even further than that. They will actually get you a auction price and an absolute value on your trade-in vehicle, and in essence, basically take it to market for you and get you an actual price. We don't have a solution like that. That's one of the categories that's out there, and it would be a great fit for what we're doing, especially since most of the investments that we're making are on the digital retailing side, ensuring that you as a consumer can buy a car online or have a basically a digital service experience as well. And so if we're looking at different categories, we're typically looking for categories that are fitting into those key areas. Now, that isn't to say we wouldn't be interested in other categories. So there's categories out there that of solutions out there that do things like help a dealership with tire storage and storing tires, which is a really interesting category to us, especially given that dealerships are always looking for how can they bring a consumer back for their next service visit. And if you need to be coming back to get your tires switched, and in Canada, you see this a lot more than you see it in the US, right? We have to switch tires for winter season every single spring and fall in the Canadian marketplace. And of course, in the US, in the northern states, you have that same requirement out there. Well, a lot of dealerships are moving to storing a consumer's tires for them, which keeps bringing them back. So that'd be another example of a category that we'd have an interest in, would be a great fit for our product suite.
Maury, I was so ready before this call to blame you guys for being hit up by every one of my Toyota dealerships to get their hands on my car right now. But I'm assuming that one's coming soon. That capability. So another question on basically your capital allocation strategy and growth strategy and doing all the M&A. What's the typical size of some of these acquisitions?
Oh my goodness, our acquisition size to date has varied a lot. So just bear with me here. I'm gonna give you some actual numbers. So we've ranged in size from revenue wise $400,000 to $12 million. Now, in terms of more, I guess, relevant is what are we looking for going forward? Well, we're looking, first off, we're looking for the strategic fit. That's the most important thing to us. But we keep looking for sort of bite-sized transactions. So what I mean by that is, anywhere that's sort of in that $2 to $10 million revenue mark. Would we be interested in somebody that larger, especially if it was a great fit for us? Sure, we would. Would we also be interested in somebody from the US perspective, so someone that had a US solution that was in one of our categories that we don't have today, or maybe one of our categories that we do have today where we don't have a US ready product in that particular category?
Very good. And another question I had was on, the competitive landscape. If you're looking at the playing field and, as you mentioned, there's a lot of various folks out there. There aren't direct competitors. Maybe they do one of the 13 things that you currently have, or they're one of the 12 that you don't currently have as part of the product suite. So the way I would formulate it is like, who does Quorum aspire to be that's currently out there on the marketplace?
Yeah. So a tougher question for me to answer, because we compete, like you mentioned, we compete on all kinds of different levels, right? We might compete on the dealership management system level, or we might compete against another company that has a product suite out there in the marketplace, or we might compete on digital retailing only because somebody could buy that solution without buying our DMS. Two of the largest competitors that we face are a company called CDK and another company called Reynolds. So those two have been in the DMS market for many, many years, but they have expanded their product suites, and they would probably play in just about every one of the 25 categories. There might be a couple that they're missing in. A lot of their solutions, though, aren't as integrated as what we aspire to be. So we're always very focused on trying to give the dealership a really seamless experience between our different solutions. And we're also always aspiring to try to build on one reporting engine. Now that one's tougher to do. So as we acquire a particular solution, yes, we want to integrate it first and foremost, but we'd like to bring their data into one reporting engine, because you think about it from a consumer's or from a dealership operator's perspective, they want one place to go from a reporting point of view. So, we're taking integration further and reporting further than we would see across those two main competitors that I mentioned, CDK and Reynolds.
Absolutely. I mean, of the 5 different, I guess, areas for the company, from DMS, the Autovance, all that stuff.
Right.
What would you say right now has been kind of the primary growth area, or been the reason for the most growth in the company? And which of those areas are you looking to compound upon as well?
Yeah. So it has varied quite a bit. A lot of times when we make an acquisition, we see a growth, an organic growth curve that comes off that particular acquisition once we finish the integration and once we get that particular product to market. So that has always been, excuse me, has been very consistent across all of our acquisitions. But the market has changed a bit for us, especially in the last few years, as it has for many companies out there. So with COVID hitting, dealerships were scrambling, right? They were going through this situation where some of them were needing to close down their sales departments. In extreme cases, they closed down their service and parts operation for a period of time, and then they restarted different pieces. Sales was hard to get restarted, so they moved to digital retailing. Service was easier to get restarted, and not many of them stopped the service business in the first place. It was deemed critical. And so those businesses stayed on, but different waves of COVID had different impacts for those dealerships. Then we came across, in the automotive space, vehicle inventory shortages due to chip shortages. We're still sort of dealing with that, and we're seeing that come back. And we've also seen, higher interest rates, which have put downward pressure on vehicle demand. We've seen part shortages and a few other challenges that are out there in the marketplace. So the reason I give you all that background is probably the thing that's remained consistent for us over the last 3 years is the products that are most in demand are products that help the service and parts department, because that has been the most consistent area for the dealership, and it's their highest gross margin area of their business as well. So if we can keep that service department running really smooth, or help keep that service department running really smooth for a dealership, we're going to help them manage through whatever sort of challenges are out there. That means to us, our DealerMine brand, where we have a service CRM solution, and we have our BDC, or our contact center, that's been a high demand product for us. Our recent acquisition of Accessible Accessories, which allows accessory sales on vehicles that might already be in the shop, is a high demand product for us. So those have been traditionally, over the last couple of years, 3 years, our highest demand products. Now that we're starting to see a bit of a transition on the sales side in the business. So the sales side for a dealership, the inventory is starting to return. That is varying by manufacturers. So some manufacturers are really starting to get cars back on lots for dealerships. Others are still struggling a bit, but it's coming back. And dealerships are then having to transition from being order takers on vehicles, because if you tried to buy a vehicle in the last 2 years, it was tough, to having to sell again. And so we're starting to see more interest, more demand for our sales related products, our Autovance products, our digital retailing things.
I was going to say, is that why the company just announced on June 27, 2023 about the acquisition of VINN Automotive Technologies? Was that some of the reasoning behind that acquisition?
Right. So VINN is an automotive marketplace, right, where dealerships would post all their vehicles and allow you as a consumer to easily find a vehicle. And then inside of our VINN team, we have what we call vehicle experts. So we'll help you through the buying process. And then when you are ready to actually, you're interested enough that you actually might want to take a test drive, they will then connect you with the dealership and move you through the process. But that's exactly why that acquisition was not only an acquisition in a category that was really important to us, automotive marketplace has been something we've been after for a while, but it's also because demand was starting to return for our sales related tools because dealerships had to start selling cars again. It was a great timing as well.
Absolutely. By the way, speaking of recent news that the company just put out there, actually, I think this was one of the main reasons I was like, oh, this is interesting as well. I mean, I've known the name, but this was relatively recent. Was you just had an additional added an additional board member, is Damien Leonard, right?
Yes,
from
correct.
Pine Tree. He just happens to have I mean, I'm sure he has his own career that he's very proud of, but he also happens to be the son of Mark Leonard from Constellation Software. Right. Many of my audience members definitely know that name and that person as well. So love to hear more about that and how that came all together.
Yeah. So Damien has been an investor in Quorum for a number of years. But it wasn't until recently that he grew Pine Tree's position within Quorum. So I've worked with Damien over the years. We did an interesting engagement with them sort of pre-Christmas time where we did some work together and just to get their perspective, a little bit more of their perspective on Quorum as a whole and understand their point of view better. We've integrated some of their ideas, and then they expanded their position most recently, like in the last month or so. So it made sense that Damien, with approximately 25% of Quorum, it made a lot of sense that we move him onto the board. We already understood his thinking, and so he's joining our board and here to help us make Quorum a stronger business.
Absolutely. So one industry tailwind. Sorry, I know I'm going here and there and everything.
That's fine.
The coffee just hit. But another question I want to ask you is from industry perspective. I was joking with you maybe a few minutes ago about how it's because of you guys Toyota's giving me a call. But one of the things that we're seeing at least down here in the US is that there's a huge backlog of used car or just the car market is it's a complete mess. Let's just call it what it is, right? Just demand and all that stuff. You go into any one of these dealerships, you can't expect to just go there and expect them to have the car on the lot that you're exactly looking for, right? So, from an industry perspective, can you hit on, how that might affect Quorum, maybe your overall take on what's going on in the industry, and then how either Quorum is being affected both on the positive and negative side?
Yeah, so that's a pretty broad question. So I'll try and break that into sort of pieces for us. So the first piece is just, vehicle inventory without a doubt, always a big challenge, for dealerships out there. And from our point of view, I guess what we're trying to make sure we're doing is we're trying to make sure that we're building tools that are going to bridge the gap between consumers and dealerships. And manufacturers and dealerships as well. And what we're really trying to be conscious of is that consumers have all kinds of different paths that they want to follow to buy a vehicle. Some consumers don't want to darken the door of a dealership. They'd like to buy completely online. That is actually the number of consumers that do that is a fairly small minority. That can complete an entire transaction online. So what we see a hybrid model out there. We see consumers that might start online, go in dealership, go back online, go back in dealership, and then finally close the deal. What we're trying to do is make sure we're building tools that accommodate whatever path a consumer wants to follow. They might want to do it the entire deal in dealership. We're going to accommodate that. So we're just trying to make the buying process for whatever inventory that the dealership has as simple as possible. And then with our VINN acquisition, of course, what we're also trying to do is then expand upon the number of possible leads that a dealership might get and get them really good, highly qualified leads that help them that then utilize our tools to go through that particular buying process. So we're extending out to consumers directly. Exciting acquisition for us. On the service side of the business, as I was mentioning before, that service business is so mission critical to a dealership through whatever economic environment is out there. And so for us, we have tools that are very focused on ensuring that the shop is full. We're trying to help them book service appointments. In fact, we go not only as far as with tools to help book service appointments, but we also have the contact center, the one that you were talking about that bugs you all the time, to actually try and get you as a consumer into your shop and get your recalls done, your warranty work done if applicable, your tires rotated, and whatever maintenance work needs to be done as well. And we're tracking all that, making sure that we're connecting with consumers and then allowing them to complete that particular transaction the easiest way possible for them.
So another question I have for you, and this is my favorite question to ask on, one of my favorite questions to ask on here. And, look, I've known Daniela, your head of IR for a long time. And, I know you've gone out there and done one-on-ones and meet with investors, do the company presentations, the whole dog and pony show. Even after folks had a chance to maybe get into the nitty gritty a little bit, maybe ask you a few questions, see the presentation, all that. What do investors still get most confused about when looking at Quorum?
Yeah, really good question. I think I think understanding our product suite is maybe a little bit confusing for people. Maybe understanding, how with our product suite, how are we going to market? How big are our opportunities within the market? That probably is the area of most confusion, I guess.
Okay. I mean, another way I like to ask this is, maybe there's what are some of the more frequently asked questions you also get that maybe we can address here too?
Most of the questions are around sales momentum, right? And how are we working towards improving organic growth, which starts back in our product suite and around our opportunities and then around improving growth.
Got it. Another one of my favorite questions in here. Look, we've been talking about the growth, the excitement, all that, but I got to play devil's advocate here. Some people will be asking about that. So, in your opinion, what would you say are some of the company's downside risks from achieving some of the goals you're hoping to do for the company?
I'm going to go back to growth, right? It's just been a bit. I had mentioned before, it's been a challenging environment to sell product into, and I feel like, our DMS product has, in a changing environment, is a little harder to sell. Still, we can complete sales and grow that piece of our business. Our fixed operations side of our business, our service and parts side, that's the piece that dealerships are interested in right now, and sales has been difficult to sell. And so with sales recovering for us, what we felt like we weren't firing on all cylinders, to use an automotive analogy, because the market demand wasn't there. But now we're starting to see the dynamics change in the market, the macroeconomics change a little bit. And we just feel like we're going to be able to start gaining some momentum on the organic sales side of things. And so that for us is a challenging area, and one that we're really watching closely.
Very good. Another question that I wanted to ask you on here, because when it comes to, I took a quick look at balance sheet, financial statements and whatnot, you're kind of like right there in terms of,
Yep.
Near-term profitability, what everybody, beyond just adjusted EBITDA, right?
Yep.
So what would you say is that path to profitability? I mean, I can already assume it's probably the same thing you're going to say, or you've said for the last couple of answers, but
yeah.
But also, there is this focus on still being acquisitive to grow. So there's this, how do you balance that, investing in that organic growth, and then also saying, all right, but this is an acquisition that we probably need to do. And, there's all those costs and integrations and all that stuff that's involved there too. So love to hear your opinion there.
Yeah. So I'm going to split that into two different pieces. So, one of the things for us that we've changed, like you talk about, here you are as an organization that's EBITDA positive, but you'd like to see better EBITDA margins, better free cash flow being generated from the business, and we are super conscious of that. So we made a change back late last year where we were going to, for a lot of our sales growth, we weren't going to spend as much money as we did on new logo acquisitions, and we were going to leverage more of our cross-sale opportunity that we had within our business, because we bought all these businesses and a number of our customers use one or maybe two of our brands, but we've got 5 different brands out there. So how do we do a better job of cross-selling? And every quarter we get a bit better at it, and a bit better and a bit better. But what we also are able to do is we're able to drive some costs out of the sales and marketing side of our business, but also drive some other costs out of our business just because of a change in how we were looking at things. That was intended for us to move our EBITDA margins. But we're not done. We're still looking for opportunities across the business on how we could optimize. If you go back and really read through some of the information that we had even a year ago, we talked a lot about what we called one Quorum, where we took all these different divisions that we had acquired and we moved them together into one entity. Well, by doing that, you are then over time able to optimize the business more and more and more. And so now what we're finding is there's still optimization opportunities out there within our business, still opportunities to move our EBITDA margins up. And so that for us is a big sort of continued focus for us. Obviously, why we would like to get better EBITDA margins, better free cash flow, is the other part of what you asked, and that is, hey, we could then accelerate the M&A engine. And that's why we have a direct interest in that.
Right. Because look, if there's a strategic acquisition out there that's, maybe a little bit bigger than what all right, okay, we access capital markets. You can easily tell that story. Like, listen, this makes sense. This is why and all that. Yeah. But for some of those pocket ones, you're like, I'd rather use free cash.
Yeah. Yeah. And VINN was that way. Right?
Yeah. Right. What was that? That was like less than $1 million. Right.
Yeah. Yep.
Yeah. So another question I have for you on the devil's advocate side, I promise the last one. What would you say was a mistake or a misfire that you experienced as CEO that happened and you learned from and overcame?
I would say that when we one Quorumized, I underestimated the amount of effort and the amount of change in the business, and I underestimated the amount of internal focus that would be required to get that completed. It just took a lot, and it was tough to then switch that focus from an internal focus to getting back to our roots, which was very customer centric. Like every one of the organizations that we've bought over the years has had one thing in their DNA, and it was being really close to their customers and being very customer centric. And when you undertake a one Quorum initiative, you take your eye off the ball a bit. And we're now pushing really hard to get us back to our, as I said before, our DNA.
Very cool. All right, so Maury, let me see. One more. Actually, this is my last question, but it's a doozy. Okay.
Okay. Best for last.
Yeah. So, Maury, in your opinion, where do you want to see this company in 3 to 5 years, and what would you say are some of the inflection points that'll get you there?
Yeah. So 3 to 5 years. There's different elements to it, right? So one of the things that is important to us 3 to 5 years is we would like our organic growth to be a higher growth rate than we have today, but for it also to be a consistent growth rate, and to have that whole cross-selling machine that drives a lot of that organic growth to just be working at a highly optimized level. And we're doing lots to do that, but we're not there yet. We would then, of course, like to leverage that to grow more organically in the US. But the M&A side that I talked about before, M&A strategy to round out our product suite, we'd like to sort of continue on that pace of at least one per year M&A, and we'd like to expand some of that M&A strategy into the US marketplace as well. And so, yeah, those are some pretty key elements. We do have I'll tell you, there's another element for us, and that it's around the manufacturer side of things. I had mentioned that really at the onset, quite quickly about building integration to the manufacturers, we'd like to expand our manufacturer footprint. And we're working pretty aggressively to do that as
I was
well.
going to say, I saw a release in January about the integration with Nissan. Is that what you're referring to?
That's exactly what we're referring to. So we build integration to the manufacturer for our dealership management system, but we also have integration across our whole product suite. Some products don't require it, but a majority of our products require some kind of integration.
Very good. All right. Well, I mean, Maury, we covered a lot here today. Is there anything that you think we missed?
I don't think so. No, that was a lot.
Did we do a thorough examination? I'm glad you were pleased. You made it out. So actually, the hardest question here is the last one. Where can people go and find more information on Quorum?
Yeah, so quoruminformationsystems.com is our full investor website.
Very cool. Well, Maury, really appreciate you doing this. Thank you so much for taking the time. Really do appreciate it. Good luck. Stay safe. And I look forward to our next update.
All right. So do I. Thanks for having me on the show.
Absolutely. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.